All right, let's get right into it. Last time, we made the case that a brand new market cycle has started, kind of quietly, right under everyone's nose. So today, we're going to pull back the curtain on what's really driving it. We're talking about where the smart money's actually going for the next, say, 5, maybe even 10 years.
Yeah, so the key takeaway was that this new cycle, it isn't waiting around for the headlines to catch up. It's already moving, while most folks are still stuck looking in the rearview mirror. This isn't about the next couple of weeks, you know? It's about a deep, fundamental shift that's happening right now.
And that leads us to the big one, right? The single most important question you can ask as an investor today. Because look, every cycle has its winners, and it leaves a lot of others in the dust. Getting this question right is pretty much everything when it comes to being ready for what's coming.
Okay, so to figure out where that money's headed, we've got to understand the engine behind it all. See, every single market cycle, and I mean every one, is driven by one core theme. It's like a central idea that just perfectly captures the biggest needs and, of course, the biggest opportunities of that era.
Just think back a bit. In the early 2000s, what was it all about? Building out the internet's backbone, right? Then, after the '08 crisis, everything shifted to mobile and the cloud. And post-2020? A mad dash for digital acceleration. In hindsight, the leaders were so obvious. And it wasn't because they were just popular trends. It's because that's where necessity and massive investment collided. And that is the key to this new cycle. Its core theme is capital expenditure, or what you'll hear called CAPEX. We're shifting into a time that's going to be defined by huge, long-term investments in the physical world. I'm talking about building the actual, tangible infrastructure of tomorrow. This is where the real capital is flowing.
All right, so if we're in a CapEx cycle, where's all that cash going? Let's break it down, starting with the first huge pillar. And it begins with the technology that's on everyone's lips, AI. But, and this is absolutely crucial, probably not in the way you're thinking about it.
This is where we see a huge disconnect. The everyday retail view is that AI is all about software, right? Chatbots, cool apps on your phone. But the structural view, where the serious, long-term money is going, sees AI for what it really is, a massive infrastructure build-out. Seriously, think on the scale of the railroads or the electrical grid. So, what does that mean? It means the real opportunity is in the picks and shovels of this new gold rush. We're talking about the super advanced chips, the mind-bogglingly complex machines that make those chips, the specialized memory they need, and of course, the massive new data centers with their insane power and cooling demands. And this really sums it all up. AI is not just a software story. It is an infrastructure supercycle. And you have to understand, these kinds of cycles don't just last for a few months. We're talking years, maybe even a full decade of build-out. But hang on a second. All of this raises a massive question. I mean, this huge computational infrastructure, it needs something foundational to run on, something most people are completely missing. So what on earth powers a supercycle of this scale?
Well, the answer is the silent partner in this whole revolution: energy. You simply cannot have this AI explosion without a parallel energy explosion. It's not a theory, it's just plain old physics. And here we go again, another huge disconnect. A lot of the common discussion is focused on ESG trends and narratives, and that's fine. But the structural reality is all about the hard physics of demand. It's simple. If your demand for computation doubles, your demand for power is going to follow. The market, believe it or not, has not fully woken up to this yet.
And look, this isn't your grandfather's energy story. We're not just talking about oil here. We're talking about natural gas as a vital bridge fuel, a huge resurgence in nuclear power, a massive overhaul of the grid just to handle these new loads, and a giant build-out of battery storage. This is where the next big wave of energy capex is headed.
Now, building out all of this AI and energy infrastructure, it takes more than just money. It requires a revolution in how we actually build things. And that leads us straight to our third pillar, industrial automation. This is being driven by basic economics and a complete rethinking of how global supply chains should work. You know, the pandemic taught the entire world a very, very expensive lesson. That old model of just-in-time efficiency, sure, it was cheap, but man was it fragile. The new paradigm, the new way of thinking, is all about building resilience. And that means bringing manufacturing and supply chains back home, or at least closer to home.
And this massive shift, it's going to require enormous investment in automation. I mean, think about it. When your labor costs are higher and you need to build things locally, capital has to replace labor. That's just how it works.
So that means a boom for factory automation, for smart logistics, and for robotics that can finally make domestic manufacturing competitive again.
But this whole drive for domestic manufacturing and secure supply chains, it isn't just about economics, is it? It's also about national security. And that brings us perfectly to our final pillar, defense and realignment. This is a theme driven by a structural shift in the geopolitical landscape that, frankly, you just can't afford to ignore.
Yeah, the whole mindset around defense spending has fundamentally changed. What we might have seen as just a temporary budget spike in the past is now being understood for what it is, a long-term structural rearmament phase. The world order is fragmenting, and regional alliances are getting stronger. This is the new reality.
And it's a simple rule. Capital flows where governments spend. Budgets are rising all over the world. This creates sustained, predictable demand for defense tech, for cybersecurity, for aerospace, and for all the suppliers in that ecosystem. This is a trend with very long legs.
All right, so we've laid out 4 massive foundational pillars: AI infrastructure, energy, automation, and defense. Now let's step back, put it all together, and see the big picture that they're painting for this new market cycle. And what we're seeing is a real changing of the guard. The darlings of the last cycle, the unprofitable tech companies, the speculative assets that were all fueled by cheap money, they're being replaced. The new leaders are grounded in the real, physical world. We're talking infrastructure, energy, automation, and defense.
So if you take one thing away from this, let it be this. We are in a capital expenditure cycle, a CapEx cycle. This kind of market rewards the companies that are actually building the tangible things of the future. It doesn't reward the speculators. It's a massive return to the real economy.
And what's so powerful about this is how these pillars all lock together. They're not separate trends, they feed each other. AI's crazy growth demands a huge energy buildout. Both of those things require industrial automation to get built. And the whole geopolitical situation just pours gasoline on the fire, accelerating the need for secure domestic investment in all three. It's a virtuous cycle. So look, we've laid out the what. We've identified the core themes that are going to lead this new cycle. But just knowing what is happening is only half the puzzle. The how? Well, the how is everything. Are you positioned correctly for this? In our next explainer, we're going to break down exactly how to approach this new world. We'll get into specific industries to watch, the signals you need to look for, and how you can actually build a portfolio for a CapEx world without chasing hype or making emotional mistakes.